Welcome to This Explainer. Okay, so let's just dive right into the giant machine behind global finance and discover what actually makes it tick. We usually think of the financial world as this cold, calculating beast, right? Something built entirely on pure math and rigid data. But today, we're going to uncover the very human element that is actually driving the entire system.
Let's start with a really massive question. It's so easy to look at those scrolling ticker tapes, the impossibly complex charts, and those lightning-fast trading algorithms and just feel completely overwhelmed. But beneath all that math and apparent complexity, the ultimate driver of the global stock market is actually something deeply, fundamentally human. It's not just about the money itself, no. It's about our collective relationship with it. It's about our fears and, well, our hopes for the future.
Section 1. The first stock market, from ships to screens.
To answer our big question, we kind of have to look back at the origins of trading to see how a very practical need inadvertently created the sprawling global system we rely on today. So picture this. Back in the 1600s, the Dutch East India Company employed hundreds of these massive wooden ships trading gold, porcelain, spices, silk, the whole shebang. But running a global operation like that was incredibly expensive and honestly, highly risky. So to fund these grand voyages, the company turned to private citizens. They basically offered everyday individuals the chance to put up money up front in exchange for a share of the ship's eventual profits. And by selling these shares in local coffee houses and bustling shipping ports, they unknowingly invented the world's first stock market. As time marched on through the 1700s and into the 1900s, this practice naturally evolved from casual coffeehouse handshakes into official, highly structured exchanges. And looking at the modern day, this concept of shared risk and reward has exploded into a system so vast it literally has its own dedicated schools, lifelong careers, and 24/7 television channels devoted to tracking its every single move.
Section 2. How modern investing works, launching the coffee company.
Now, obviously, the modern market is infinitely more complicated than those early spice ships, but the core mechanic? It's exactly the same. Imagine a modern coffee company with a brilliant idea, ready to really scale up its operations. When they initiate an IPO, that's an initial public offering, they aren't just trying to raise capital. What they're effectively doing is measuring public belief. So instead of viewing it as a dry, boring financial transaction, think of an IPO as the ultimate test of mass psychology. It is the exact moment everyday individuals are asked, hey, do you believe in this idea enough to buy a piece of it? It's this fascinating gateway from private backing to public validation, completely opening the doors for anyone to become a partial owner based purely on their confidence in the company's potential.
Let's track this journey step by step to see how belief quite literally fuels growth. First, the company pitches big investors who get the very first crack at the opportunity. Second, if those insiders actually believe in the idea, they sponsor the IPO. Third, the company officially launches on the public market. And finally, everyday investors who believe the business will succeed start buying shares. And you guys, this is where the magic happens. Because as more buyers see potential, demand naturally increases. This upward pressure raises the stock price, which then increases the value for everyone who already owns it. But most importantly, it gives the company the actual funds they need to launch new initiatives. It boosts their overall market value by proving, in real time, just how many people are willing to put their hard-earned money behind that core idea.
Section 3. The seesaw of value, supply, demand, and perception.
But, as we all know, what goes up can definitely come down, which creates this highly volatile seesaw of value. On one side, we have an upward loop of momentum. High demand from excited investors pushes the price up, resulting in a significantly higher market value. Everyone's happy, right? But if a company's prospects suddenly start to look a little dim, the exact reverse happens. Fear takes over. Investors get spooked and quickly sell off their stocks, hoping to salvage a profit before the company loses even more value. As those stocks are dumped, demand plummets, the price falls, and the company severely damages its overall market value. This downward spiral can literally leave investors with massive losses and completely shatter a business's reputation, unless they somehow manage to change the public narrative and look profitable once again.
So, what pushes this seesaw around on a daily basis? Well, companies are under the unavoidable influence of shifting material prices, rapid changes in production technology, and evolving labor costs. On top of that, investors might get spooked by sudden leadership changes, a wave of bad publicity, or macro factors like new laws and global trade policies. Or, hey, maybe a large group of investors are simply ready to sell their valuable stocks so they can buy a house or pursue other personal interests. All these variables create intense day-to-day noise, giving the illusion of this unpredictable, extreme complexity. But what happens when we strip away the mathematical noise and look at the actual humans reacting to it?
Section 4. Why confidence moves markets
the belief engine.
And this brings us right from cold financial mechanics straight into the true psychological engine of the entire system. Check this out. In the stock market, appearing to lose value often leads to losing investors, and in turn, losing actual value. It is a highly, highly dangerous, self-fulfilling prophecy. The mere perception of a company struggling can cause a widespread panic that creates a very real, tangible financial decline. So the health of a stock isn't always dictated by what's actually happening on the balance sheet behind closed doors. It's heavily dictated by what the general public thinks is happening. It all really boils down to this. Human confidence in the market has the power to trigger everything from economic booms to financial crises. Raw human confidence, and of course its dark mirror, human fear, are the invisible forces that are truly triggering the market's massive historical swings. When collective confidence is high, money flows freely and the market booms. But when that confidence vanishes, credit freezes, people panic, and financial crises happen. At its very core, global finance is an engine powered almost entirely by collective belief.
Now, because human belief is such a difficult, erratic variable to track, navigating it successfully requires a lot of strategy and immense discipline. This is exactly why professionals heavily promote reliable, long-term investing to navigate this confidence-driven system. Actually, instead of trying to day trade on the emotional, totally unpredictable swings of human panic and hype, financial experts build long-term frameworks designed to weather those psychological storms. This increases their chances of long-term success by focusing on underlying value rather than just, daily market sentiment. Section 5. Your turn to invest. Navigating the market today.
All right, we've talked about the historical origins, the daily mechanics, and the underlying psychology. Now, let's talk about you. The stock market is no longer this walled garden reserved solely for the rich, the powerful, or the well-connected insiders. Thanks to the internet, the playing field has completely leveled. Everyday investors can easily educate themselves about this incredibly complex system and buy stocks in many of the exact same ways a large institutional investor would. You have the access, the tools, and the absolute ability to pursue your own financial goals by putting your money directly behind the ideas you care about.
So, I'll leave you with this final question. What business do you believe in? Because the very first step is simply getting invested. Since human confidence is the true beating heart of the global economy, the absolute most powerful thing you can do as an everyday investor is to find a company you genuinely believe in, support their vision, and put that belief to work. Thank you so much for joining me for this explainer. I really hope it gave you a whole new perspective on the invisible forces that are truly driving the market.